Well, let's go ahead and get started. Hello, my name is Jonathan Nelson, and we are here talking about Hack VC, which is Hackers and Founders venture fund built on the blockchain. And we are going to be talking about liquidity and why that's actually important and why we're actually doing this. And I'll talk a little bit about us first. Um, and I'll talk a little bit about us first. Um, and so are you guys mostly seeing Torrance or are you guys mostly seeing me? If you guys have any questions, you guys can actually use the chat button and we can go there. Perfect. And we'll go from there. Let us know if there's actually any problems and we can talk about that. Let me see chat. Perfect. So Hack VC, who are we? What are we doing? Hackers and Founders is a unique organization. We started about 10 years ago, having meetups in bars in Silicon Valley. And through that, we have had conversations, really through our events, we've had conversations with thousands and thousands of entrepreneurs around the globe. Hackers and Founders events have been held in about 120 cities around the globe. We've had several 100,000 people attend our events worldwide over the last 10 years. And, you know, the purpose is really just to kind of connect entrepreneurs who are building technology companies together, help them help each other out. And be kind of a support group and support network for entrepreneurs. About 5 years ago, we started noticing something which was happening worldwide. The costs of building a technology startup had decreased enough, and so that pretty much anyone with a computer and an internet connection anywhere in the world could actually start to build a serious technology company. You no longer had to be in Silicon Valley. You no longer had to be in a major tech hub to actually start one of these companies. And we started to see really an explosion of tech entrepreneurship around the globe. We were at the epicenter of it because we're hackers and founders, and people, these entrepreneurs are getting together in bars, helping each other out worldwide. And what happened is that you would actually have entrepreneurs who are building something, they start to build a thing, then sometimes that thing evolves into a product. The difference is that someone wants the product, no one wants the thing. Sometimes that product starts to sell and it starts to sell quickly. And then sometimes that thing sells quickly and they'll try to get capital into this company that's selling this product quickly, and this thing grows. And then occasionally some magic happens, and a giant metamorphosis happens, and this little kind of buzzing around startup ends up metamorphosing into this giant unicorn company like Google or Facebook or Twitter. And they basically go around an ecosystem and they acquire or eat other startups, and they shit gold all the way into the ecosystem, which fertilizes kind of the next generation of entrepreneurs. And you get pieces of entrepreneurs kind of falling out of the unicorn's mouth, and you get, you know, entrepreneurs who built startups before, along with the capital that's actually floating in this. And we started to see a bunch of these grassroots kind of entrepreneur groups starting to happen. They're creating products, they were starting to sell quickly, and these people would come to Silicon Valley. And they would come to our meetups and they would say, "Hey, Jonathan, how do I raise, you know, millions of dollars for my company?" And I'd be like, "Yeah, I don't know." They're like, "Really? You need to know, like, you run Hackers and Founders." And so I started on this quest to figure out how money worked in Silicon Valley. And that quest has actually led me into some really interesting areas. It led to Hackers and Founders being turned into a business. So the business part of Hackers and Founders the last 5 years has been, we help companies land in Silicon Valley and help them scale globally. We've worked with about 55 companies. Those companies are now worth in aggregate about $600 million. They've raised about $100 million as a group We have had 7 exits or acquisitions. Unicorns have eaten 7 of our companies. And we've developed a way for essentially to pool together some of the stock that we get from these companies that pay us in stock, and then we sell part of the pool. Our investors have done very well. We've been doing about 30% year over year for our investors over the last 5 years. We started a similar program in Mexico for companies scaling across the Spanish-speaking world. That program is going very well. We have our first 12 companies, I believe, down there. They're doing very, very well. And they are, they're growing. And so we have this pretty unique perspective of companies. And so one of the big problems that we've actually had is we have been helping companies actually raise money in Silicon Valley. Now, if you are not part of the standard pattern match in Silicon Valley, it's actually quite hard to raise money in Silicon Valley. What do I mean by pattern match? An investor tends to invest, a venture capitalist will tend to invest based on who they believe will be able to sell a company to a big unicorn like Google or Facebook, or they will invest in a company that they believe can be an IPO. And they base this based off of what the person looks like, what they act like. And so if they recognize what they believe is to be the beginnings of a unicorn maker CEO, then you can actually raise money. Most of those unicorn CEOs have been Caucasian. They have dropped out of Ivy League schools. They have majored in computer science. They tend to be guys. And that's one of the challenges that people actually have, that outsiders in Silicon Valley have raising capital. So we've worked very hard with our portfolio companies to actually do that. And sometimes it's challenging. And so I'm also an advisor to, for instance, one of the local law schools in Silicon Valley, UC Hastings. It's a top 50 law school world nationwide. And through there, we submitted 80 pages of comments to the Securities and Exchange Commission on what the Jobs Act, what crowdfunding should look like. One of the commissioners at the SEC really liked what we wrote, and she actually invited me to join an SEC committee. So I have been in Washington, D.C. a couple of times a year for the last few years, talking about getting capital to startups and talking about how do we actually let anyone, not just rich people, invest in startups. And one of the biggest problems that's actually come up over and over and over again in our conversations at the SEC, and I believe it is the reason why people always come to Silicon Valley to actually raise money, is this. It's called the liquidity problem, and it's a bit of a strange, so follow me. Investors only make money in startups when they buy stock into a company, and then the goal is that they want to sell that stock at a much higher price down the road. This is how startup investment works. The only way that I can buy stock into a tech company and then resell it later, there's 2 ways that I can do that. One is if the tech company gets acquired by Google or Facebook. And 2 is if that company allows the investors to sell their stock on a NASDAQ, on a public market. That's called an IPO. So the 2 ways that investors can make money in startups are investing into a company that's going to IPO and investing into a company that gets acquired by Google. And so that's the only way that people can do that. Now, the challenge is that 85% of the world's technology acquisitions happen in Silicon Valley. 85% of the companies that are acquired by big technology giants, those happen in a small 100-kilometer, 60-square-mile area in Silicon Valley. And it's generally through people that you've built partnerships with before and that you've actually known. And so Silicon Valley is this hub of technology acquisitions, and that is why people make money investing in startups here. And this is why people invest in startups in Silicon Valley. This year, there's going to be about $30 billion invested into technology companies in Silicon Valley alone. The rest of the world is probably about a third of that. And so 2/3 of all the venture capital in the world get invested into Silicon Valley. Why? Because over 3/4 of all the technology companies that are acquired get acquired in Silicon Valley. And so you have a problem, for instance, in the middle of the United States. If you are an entrepreneur and you are in Des Moines, Iowa, how are you going to be able to raise money, convince people to buy stock in your company if you can't convince people that you're going to be able to be acquired by Google, or that you'll be able to IPO? The same thing we've actually found happens in pretty much the entire rest of the world. If I'm in Guadalajara, if I'm in Buenos Aires, Argentina, if I am in Lithuania, how do I convince an angel investor or a venture capitalist that I'm going to be able to sell my company down the road to a large tech company? Your chances of raising funding essentially decrease exponentially the further away you get from Silicon Valley and large acquirers like Google, Facebook, that sort of stuff. And so when an investor invests money in their company, that money is frozen. In Silicon Valley, there's liquidity. And so that money can actually unthaw and get sold again. This is called the liquidity problem. In crowdfunding, how do we actually let anyone and everyone invest within certain limits into companies when we're pretty sure that these companies, or it's only going to be a rare company that's going to get acquired by a larger company? And so that's the challenge. This is called the liquidity problem. In Silicon Valley, you actually have $4 trillion worth of technology companies. All of the stock for all of the companies in Silicon Valley are worth about $4 trillion. That is 15% of all of the stock in the United States, and it's 5% of the value of all of the stock in the world. William Gibson had a statement. He said, the guy who invented the cyberpunk thing said, the future is already here. It's just not very evenly distributed yet. I would argue that the capital is here for technology companies. It's just not evenly distributed yet. And so what do we do for technology companies, for instance, in Latin America, in Iowa? And this problem has essentially, I'm obsessed about this problem for several years. And I'm convinced that through my work at the SEC, through my work with tens of thousands of entrepreneurs over the last decade, that we have got to bring more liquidity into the startup or small business world so that we can essentially get more money to these people and invest profitably into these companies. And so what we're actually doing is we are building a liquid fund. What does that mean? We are building a fund where investors can buy, sell, and trade the stock, the tokens in the fund. How does that help? How does that help solve liquidity? And so in a traditional venture fund, if I invest into a venture fund, I pay someone I invest $5 million into a fund, that money gets invested into 50 companies. I only make my money, having invested into this venture fund, if a handful of those 50 companies get sold to Google for hundreds of millions of dollars or IPO. That's it. The rest of the time, my money just sits there and it's frozen. What if, instead of investing in this fund and that money gets frozen there, what if I could essentially invest in this fund and I could sell stock in the fund? What if I buy stock in the fund and then sell it, just like I would, a stock that was actually listed on a stock exchange, like on a NASDAQ? What if venture funds worked like a little mini mutual fund, which would be bags of stock of companies where people can buy, sell, and trade the shares in the fund itself, and they don't have to worry about buying and selling and trading stock in 50 or 300 companies. And so I did a lot of research on what a liquid fund would look like, what we could actually do, how we could actually do it. And it turns out that using this blockchain technology that's emerged in the last couple of years, we can create something like a digital share, and we can let people buy, sell, and trade the stock in our fund. This gives us a couple of huge advantages as a fund. The first is people can make money aside from only when the companies get acquired or have an IPO. In a traditional fund, that's the only way the fund investors make money. In a liquid fund, my job as a fund manager is to find companies whose value is going to grow quickly. What do I mean by that? For instance, if I have a company that's doing $1 million a year in revenue, and they are growing that revenue by 50% every year, the value of that company should grow 50% a year, right? What if I was able to invest into a portfolio of companies that was growing 30 to 50% every year? The value of that portfolio would grow 30 to 50% every year. And now, because the portfolio itself, the fund itself is liquid, you don't have to worry about only making money if one of your companies gets acquired by Google. You can essentially make money if the value of the stock, if the value of the portfolio ends up growing over the long term. And it fundamentally changes the economics of how a fund works. And it changes the economics of how we actually invest in companies. And frankly, it's actually a lot easier. If I were an investor in a traditional venture fund, my job would be to guess at which companies I could invest in that would get acquired by Google in 10 years or IPO in 10 years. It's a guess. Sometimes they're good guesses, sometimes they're bad guesses. As the investor in a venture fund that's liquid, I just have to figure out which companies are probably going to grow quickly, 30, 50, 100%, 300% a year for the next few years. That's actually a lot easier to do than invest into a company where I'm guessing that these companies might grow. And so if these companies grow in value, and this is other people saying what the value of these companies are, you can audit that process so that you report it as if this were a fund traded on a stock exchange. And people can actually see the value of your fund growing. The value of people's investment should also grow 30, 50, 100% a year, depending on what the value of the companies is doing. We've actually been seeing this happen in our own portfolio. Our companies on average have been growing 30% a year for the last 5 years. The values of their companies have been growing 30% a year for the last 5 years. And now we're actually trying to scale this. But why should we actually go through all of the problem with this? Well, it's called the rest of the world. The vast majority of money gets invested into technology companies in Silicon Valley. And if you are actually in Sao Paulo, Brazil, if you're elsewhere, investors really don't want to talk to you. Why? Because your chances of getting acquired by Google are very tiny, and they don't want to travel and what have you. Hackers and Founders is in a unique position where we've had events in 120 cities around the globe. We know thousands of technology entrepreneurs globally, many of whom can't get to the United States because of visa issues. Many of them don't want to move to the United States because of government issues. And so there's these, and many of them, for instance, want to address customers who speak Spanish. You know, Latin America is a very interesting case study. The Spanish-speaking world is 10% of the world's economy. 10% of the world's economy, it's about $8 trillion in GDP, which is an economic measurement. It's $8 trillion a year, and it only receives $500 million a year in investment. Why is that? Because the companies in Latin America don't buy other companies. Because of that, people don't buy stock in other companies. So because of that, you don't invest in companies and economies stagnate. If I'm building a company and I can't get capital to actually grow my company quickly, the only way I could grow my company is based on what I sell. And that's going to be a lot slower than if I could get 5 million, 10 million, 50 million, $100 million to actually grow my company. And so, Latin America, which is 10% of the world's economy, receives really $500 million a year, which is one big check in Silicon Valley. And that is all of the companies, and not just angel and venture capital, but also private equity, which is a much bigger category than that. If we could build $100 million fund, we would increase direct investment into a continent by 5 or 10% a year, which is crazy. You would move entire economies, and you would have access to 10% of the world's technology startups that no one else is investing in and that no one has access to. And the same problem that you see in Latin America, you also see in areas of the world like Africa. You see it in the Middle East. You see it in Eastern Europe. Most of Europe, for instance, really doesn't receive that much venture capital investment. Why? No liquidity, no investments go in because there's no liquidity. And so I firmly believe that liquid venture funds will grow entire economies. I'm a weird kid. I grew up in Central America. Mom and dad were missionaries. I grew up at the end of 6 hours of dirt road in rural Honduras playing soccer with kids without shoes. My initial dream was to come to Silicon Valley, and it was to, I wanted to learn how to build a company, sell it to Google for $5 or $10 million so then I could retire early. And then my plan was I was going to move back to Central America, and I was going to do economic development. How do we figure out how to get shoes on little kids? It turns out that from Silicon Valley, we've come across this and we've invented this tool that I believe is going to be able to invest, profitably invest hundreds of millions of dollars over the long term into parts of the world that don't get investment, which means that we will create hundreds of thousands of jobs or companies in those areas, and we will create hundreds of millions of jobs in these regions. And that puts shoes on tens of millions, hundreds of millions of little kids. In my mind, this is not only a great way to make money, but because nobody else is doing this, but also in my mind, it's a great way to actually solve poverty. What if we could actually take a serious bite out of poverty by helping other people build companies? I would argue it's really the only way that you actually solve something like poverty. To solve poverty, you need a bigger economy. To have a bigger economy, you just need more companies that are providing more people with jobs. And wouldn't it be great if we could provide jobs that weren't, cutting bananas in a banana plantation like many people did in Honduras and Costa Rica, where I grew up, and you could actually provide them jobs building software and shipping software around the world and selling it to a global market. That's the opportunity in front of us right now, to not only do good in the world, but also to make money by doing good in the world. And that's my passion, and that's what keeps me going 100 hours a week, is the idea that we're going to actually be able to change the world by creating liquid funds so that we can actually invest money into parts of the world that haven't had it before. And this is what we're doing at HackVC. The other advantages of building a liquid fund is it costs me the same amount to find an investor that invests $5 million into my fund as it does to find a million investors that invest $5 into my fund. My cost per investor is the same because this thing is software based, because it's digital, because it's based on the blockchain. And frankly, I would rather have a million investors put in $5. Why is that, Jonathan? Because if one of our portfolio companies, one of the big challenges that companies have in the technology world is I can build technology, but how do I let people know about that? What if we had, just 10,000 people that had invested in this fund be able to tweet and retweet about one of our portfolio companies' success? That's a huge value add. That's a huge advantage to this fund that nobody else is going to have. We will have a built-in user base, a built-in fan base to any of our portfolio companies that actually move. And so not only will we be able to provide them capital, we will be able to provide them with services and support like we have been doing the last 5 years. We'll be able to provide them with a user base. I fundamentally believe that HackVC is the beginning of how we change the world. And it sounds trite. It sounds like a very Silicon Valley thing to say. But I have talked to people in governments. I have been on a Securities and Exchange Commission committee that examines how we actually grow economies and how we handle investment into startups. I have been talking with global development banks, the Inter-American Development Bank, about how we actually do this. And over, the subject comes up. I believe, and other people believe as well, that this is the way to actually grow economies. And we'd like you guys to join us. How do you do that? You go to hackvc.hf.cx. Read our documents. If you think it's a good investment, you can go through and you can click through to buy.hf.cx. We do have to comply with laws. And so this is not available to non-rich investors in the United States because of the SEC's regulations. This is not available. You can't do this anonymously. We need a photo ID. But we'd love for you guys to actually join us. If you want, there is a link in the chat to hackvc.hf.cx. Please click through. And that's what we're doing. And I would like to work with you guys to actually help solve poverty and make some money doing it. So if any of you have any questions, please let me know, let our team know. We have a Telegram channel where you can actually chat and ask questions. Torrance, can you give us the link to the Telegram channel in the chat here? We have the website, HackVC. We have our Telegram channel where you can go in and chat with other people who are actually doing this. And you can actually, if you want to post some questions in the chat right now, I'd be happy to answer those for you guys. But that's it. Are there any questions from the audience? Have another couple of minutes. We can actually ask any questions if anyone wants to ask them. Okay. Well, folks, really appreciate your time. I really appreciate the effort. The question is it Ethereum based? Yes. So HackVC is an Ethereum, it's an ERC 220 or 223 compliant token. And so you need a wallet that's compliant with those Ethereum tokens. But yeah, it's a simple smart contract, and I believe the code is actually up on our website as well. We can go through. ERC20 compliant, yes. So, and if you guys have any additional questions, feel free to ask them in the Telegram channel, which is a chat software, and we can go from there. So thank you all for your time. Have a great day. I really appreciate it, and let's kick some ass and let's change the world together. Cheers.